Hi, good afternoon everyone. It's Jasper here. Thanks very much for attending today's webinar. Hope you've all in the UK, that is, adjusted to the change in the times. Bit of a struggle this morning to wake up. So we're going to kick off pretty shortly here. We're past the 12:30 mark. I assume, can everyone hear me okay and see the screen? Fantastic. All right, thanks for that. Right, let's get on with it then. I'm going to assume you've all read the risk warning at this stage. Let's just jump gears straight to the platform. So obviously all the global trade war fears still rattling around in markets, but we're actually seeing a bit of a recovery in risk sentiment. So we'll start with the Forex markets. What that has meant is that while the US dollar was being used as a haven trade, obviously it's the US initiating these trade wars, and I think the logic there being that actually it's probably not good for the net global economy, but given the US has such a massive trade deficit, anything that can be done to bring that down, including a trade war, probably the US wins out versus other global regions, so people were moving into the dollar. As it becomes more clear that maybe the US and China can work out some sort of settlement without the use of tariffs, actually the dollar downtrend is resuming a bit, for the time being at least. So here you can see in the euro dollar that we're getting a bit of a breakout from this triangle pattern. Now, this was quite a substantial pattern that I've highlighted here, where you can see that we had that bearish engulfing, well, if I move that out of the way, you can see it was a bearish engulfing pattern, took out these lows here, but found support on this rising trend line the next day and rallied right up and closed above. So it was a bullish engulfing pattern, and two large range bars. So big bearish sentiment, immediately switched gears to bullish sentiment. We saw a down day the next day. We tried to push higher. We came off this declining trend line on the top side, so basically a triangle pattern forming. And now, as of today, we had an inside bar, and then we popped out to the top side of the trend line. So if we can close above this declining trend line, it's looking fairly bullish at this point. So probably looking for a retest of the top of the trading range up here at 125 to 125. I think the high here, you can see down in the bottom left corner, was 124.90, 124.93. So probably change that. 493? No, what am I talking about? Right, 3. No, 20. Maybe I have my mouse in the wrong place. Meant to have my mouse here. High was 125.37. So that's kind of actually what we want, which I think is probably about where we're at it anyway. There we go. Yeah, so it's something in those range. Obviously, we've got that peak there, we've got that peak there, but something in this vicinity you'd imagine would be a bit of resistance to price should we get up there. But it looks like quite a good chance that we do at the moment. And obviously that is in keeping with the longer term trend that we have in place, which is with the 50 comfortably above the 200-day moving average. Should we fail to close above, then that just leaves us in this trading range again. We do have some nearer term resistance, so watch out for that. I wouldn't necessarily be selling at it unless it was a very short duration trade. But let's see. Basically in this sort of vicinity, obviously we've got this high here, which we're stumbling a little bit at the moment, and this peak right here around the 24.50 mark basically could obviously see prices dip. I think that would more ideally be a places where maybe price rolls over a bit and it gives you a chance to buy a dip if we get that high. You wouldn't necessarily be looking to sell it. As I said, it's this was quite a bullish pattern. We've seen a breakout. We're in keeping with the long-term trend. So those factors to me would suggest we're pushing higher, which would mean I would be less inclined to sell up at that 124.50. But who knows? We could obviously roll down there right down to this rising trend line and would still be probably net fairly bullish. Switching gears to the pound, been one of the stronger performing currencies, not surprisingly. After we had that Brexit transition deal and this dollar weakness resuming, we're pushing up through 140.42 as we speak, and Obviously, the big resistance level closer by, a very similar looking setup to the euro, but the resistance a bit nearby, about 142.80 up to 143, to me would be an area where perhaps if we see some fairly clear-cut bearish pattern and a bearish engulfing, or a big pin bar reversal, it would be tempting to take that, because we're in a longer-term bullish trend. Fundamentals support the pound at the moment, yet is quite a strong resistance level, and who knows, if we get another flight to safety, the dollar could find a bid. So that would be a level to watch out for, but just be mindful it's against the trend, the 142.80 to 143. No clear-cut opportunities at the moment, other than that we had this inside day breakout here. This was also in itself a bullish, bearish, bullish engulfing pattern, and then we've again here had an inside day, and then we're having a bullish breakout of that inside day at the moment. So quite a few bullish patterns on the daily candlesticks to get involved on this shift into kind of higher gear, especially as we've moved above this 50-day moving average. You can see it was kind of capping the prices, and then we got that bullish engulfing above it, taking out a few days highs, and we've been looking quite good since then. So still looking quite constructive, but just difficult obviously at this stage to be buying at the highs, but buying new patterns and buying weakness, maybe a pullback from that 142.80 level. If we get some kind of drop back down, maybe even if we get down to 141 again, it still looks good, like we could actually get a break from the top. Another thing to look out for at this stage would maybe just be waiting for a close above 142.80 or 143. Obviously you're buying near the highs, but it's more akin to a breakout if you get that confirmed close up there. 144.68 is a bit of a random level I've got up the top here, but that's basically the weekly opening and closing price on the week of Brexit. So that just could be an interesting one where the market could stumble. I'll show you that on the weekly chart there as well while we're here. So this basically. So obviously, yeah, we spiked higher that week on the eve of the voting, and then just rolled over massively. That was where we finished the week before. Spiked up, rolled over. So this level could be interesting. If we get through there, then obviously we're looking more to the top of this pre-Brexit trading range. Also coincides, 144.68 obviously just a few pips shy of 145. Switching gear to dollar yen. So I misread this a bit previously. I did caution myself and others that it's still a downtrend, but I was looking for the previous trend line that we had on here was something like this. So you can see it was being respected, but ultimately just the fact that it's a downtrend won out. So we've got a break of the trend line. We tried to rally from it a few times, and then we had this little pattern here, the kind of two matching highs almost, a very weak bearish engulfing pattern. There were two pretty similar matching lows. So if you just traded the break of those two matching lows down into fresh lows down here, you would have been with the trend. It was that 106.50 round number that basically capped that little rally off the trend line, and ultimately we're just still in a downtrend. So first sign of strength, I would say, but it hasn't worked out the first time around. But even if you extend this trend line down a bit, you can see we're still sort of dealing with it a little bit. But we have broken through the lows. It is definitely a downtrend. So seems probably premature to be buying here. The only real supportive reason to get long the market, I would say, is that we've hit this 105 psychological level. So maybe depending on how we close today, if we get a big bullish close through Friday's high, maybe you could go for that purely based on that 105 level. For me, I'd probably be waiting for, I've got this new trend line in going through these peaks. I'd be looking for more kind of confirmation that this downtrend is over with a break through those old highs before starting to get long dollar yen. And you may notice I've got this target down here. Again, you know, it's we're a bit short of resistance in the near term and support in the near term. If you pull out to this weekly chart, that's where we saw that massive rally for dollar yen a while back. Around that 101.30 was the low. And then below there, we've got the bottom of this trading range as something to contend with. But that, you know, because of the bullishness of this candle, there's not too much in the way of stopping any descent further through 105. So maybe 105 holds, but it's all looking fairly bearish overall for dollar yen. And what caught me up before was thinking, well, we've already had quite an extended run. We're approaching 105. Maybe there's enough to generate some desire to cover the shorts and the market bounces, but not yet. So just a little bit of evidence that these trends can go on longer than you think. This is a weekly chart for the UK 100, moving over to indices. It's been super volatile, pretty hard to pick out the levels here, but you notice we're just holding above this 200-week moving average, which actually on the last few tests has been interestingly pivotal. You can see we kind of struggled to get through it a couple of times down here on that big correction in 2015. And then we saw that big rally through it after is that after Brexit? Yeah. And then, yeah, I think it's more like June, yeah. And then we had this support level in place at 66.50. And then this peak here, and these two lows here, we've obviously dropped through that. So it's pretty significant dropping through that 7100/790 level. So I'd be tempted to look for some reversals if we get a jump back from this 200-week moving average. We're looking for something there. If we go down to the daily chart, it's a little bit hard to see, but obviously we took out the lows there, and I heard on Wake Up to Money this morning that actually the lows we reached in early trading, in late trading last week, were below the highs that the FTSE 100 reached in 1999 in the tech boom. So it's just not particularly relevant for trading, but obviously as a long-term investor in the FTSE 100, you better bought the dividend-paying stocks, because in terms of capital returns, there's basically been none since 1999. In fact, if you can count inflation, it's been a negative return. So what am I saying here in terms of the indices? I mean, I'm going to give a more complete overview when we get through Germany and the US, but there's going to be these volatile bounces, but for me, the trend is downwards at the moment. So I'll be looking at 70-90 if we get a rally, an improvement in sentiment from here. But it's, these markets are looking pretty soft, and buying these lows, it can work out. If you widen your stops a bit, buy the lows and sell the highs. It's been working over the last few weeks, but yeah, you just have to be aware that the swings are quite huge at the moment. But I'd count the overall trend as down, based on these moving averages, and obviously just the fractals heading lower as well. Switching gears to Germany, we had that. It's quite interesting. Everyone was making fun of the death cross, but it actually panned out pretty well. Literally a few days later, we had that massive collapse in markets. Death cross happened around here. By the time we closed, it was probably this candlestick here. We bounced the next day, and then just collapsed the next 3 days. And we found support, a bit of a kind of rising trend line off the lows here. So looking quite bullish so far today. As I said, these trade war fears easing a bit. So something akin to a triple bottom maybe. But again, I'll be wary as we head up to that 12,150 level, which is kind of capping these lows here. Might be a level that it rolls over again. Or maybe we get back up to these highs at 12,450. At the moment, we're below the moving averages. We've had the death cross. It's all looking quite weak and volatile. But as I said, it is volatile, and while we're above these two lows, we're in a trading range. So a decent pattern today, a sign of bullish recovery. We could be heading back to the top of the trading range, as I said, up to this 12,450 maybe. So some opportunity there to capture a few hundred points if you're willing to go against this kind of overall more bearish outlook. Wall Street, again, similar to the well, I was going to say it's similar to the FTSE. No, that was a 200-week moving average. This is the 200-day moving average where we found a bit of support here. And it's this old trading range. Before we had that last huge rally, this trading range has been basically kind of capping these last couple of drops. It was a triangle pattern of sorts that we broke from and dropped through. So this pattern breaking to the downside would imply that we take out these lows and get more downside. So this consolidation phase down here would obviously be another huge drop down to 22,200. We've got to be looking for if indeed we get the break through that correction low there. For the moment, this 200-day moving average is supporting the price. You can see both the DAX through its previous lows and Wall Street with the 200-day moving average, and then the FTSE more so with the 200-week moving average. A few technical supports coming in after this big drop to suggest we could get a couple of days of inclines. This is very quickly, this is just the Nasdaq, which actually looks quite a lot different to the other charts because we had that rally up to fresh record, but then obviously with all that's been happening with Facebook and its impact on the tech sector, it was easily the worst performer over the last couple of weeks. So I haven't actually got if I put it, still well above its 200-day moving average, but below that 50 obviously, and looking a bit soft. And it's basically just rallied into that this little previous low here. So it's facing some resistance from that old low. If we roll over from there again, maybe looking at an actual retest of this 200-day moving average. That wouldn't be my default scenario, and I think if we get a close above here, that would be fairly bullish. I think probably the things have got a little bit oversold in Facebook. Definitely facing a bit of a longer term issue in terms of how it treats its customer data, but do we really think people are going to leave Facebook en masse, or do we think the advertisers are going to stop advertising? Probably not. So maybe this is all a bit overdone. Switching gears to commodities. Starting with gold, so this is the weekly chart, and so it's this bullish engulfing week that I point your attention to right here. It engulfed the previous 3 weeks with that candlestick, obviously 1, 2, 3, engulfed, and this trend line, for what it's worth, it hasn't been worth too much during this correction period, but we're back above it again. We sort of pulled back to it on the daily chart. Well, not so much, but a little bit into the previous into Friday's rally. We're definitely still within this trading range. So if I get rid of where am I looking? That's a bullish engulfing, but obviously this sort of section here, if I make that a bit more clear cut, we're still in this trading range. So while this long-term trend line is interesting, we're still facing pretty stiff resistance up at that sort of 1362 kind of area. And as a reminder, this is the one we keep waiting for, the break of this sort of cup and handle, inverted head and shoulders type formation. So we're still looking for that for a kind of long-term bullish bias on gold, but not quite there yet. So far, gold kind of holding its own, even though we're getting a bit of a recovery and risk appetite, which is actually quite encouraging. Some interesting news on the oil markets today. It was the first day of trading in Shanghai of a Chinese yuan denominated crude oil contract. So that's a bit of competition actually for the likes of Brent crude and WTI. So we'll have to see how that plays out. But for the moment, both these markets are looking very bullish. They're obviously challenging the yearly highs and that 70 level. Wouldn't be surprised to see a bit of a pullback from 70, but we've already attempted it once, just a bit short of it, had that bullish engulfing on Friday. Now we're dipping again a bit, but if we pull back somewhere within halfway of this bullish engulfing pattern, I mean, at the end of the day, we did have a bullish engulfing pattern through right into the 70 level, so does look quite encouraging, but we've had a rally already, and it is quite stiff resistance. So if you are buying, just keep in mind you're buying into resistance, but it's quite looking like quite a good bullish market. For us, the next level was 73 to the top side. You have to pull yourself right back to this little spike high over there, and then 78 is where we saw that big drop during the 2014 declines, where we took out those lows. That could be the next level, 78, and obviously on its way to 80. But for all intents and purposes, it looks like it's had its pullback from 70, rallied straight back up to it, so I would assume 70 is going to break to the top side, but obviously it is a big resistance. Last but not least, I just wanted to quickly touch on Euro Sterling. This is just one to look out for. We hit 9-month lows last week. Obviously, again, this is a bit of a Brexit transition trade. We've been in this hardcore trading range for a while. We dipped through, made the lows, but rallied pretty strongly off the lows. So we're still within this trading range, but just look out for this, this level down here. That's a bit of a kind of choppy one, but it's basically 87. Is it? Yeah. Close for the week through 87 opens up some pretty huge declines, potentially down to sort of the 83s in essence. 83.20 you could maybe call it, to capture some of these lows. But that could be a relatively big drop should we break out of this trading range. Because we had such a strong rally in the euro, there isn't much to stop it before we get down to 83. Right, so I'm going to call it a day there. Thank you very much for attending, everyone. Good luck with trading this week, and see you on Wednesday. Some of you, hopefully, we're discussing a trading strategy called the basically using breakouts on a lower time frame to of a declining using breakouts of a trend line on a lower time frame to try and pinpoint swing trading on higher time frames. So bit of a mouthful. I'll hopefully explain it a bit better on Wednesday. I just got a quick question from Ezel. Yeah, happy to answer that, of course. Yes, obviously it is Good Friday, so you're going to see that end of week action shift into Thursday, obviously. So you'd imagine Friday is going to be fairly dead because those US and European markets are closed. I think US final GDP, I mean, obviously it's going to be closely watched, but at the end, the final figures, as a rule, don't tend to have as much impact as the first few previews, because we're already obviously well into, well, we're basically the end of Q1 now, so looking back in the rear view mirror at Q4 has less significance at this stage. So I don't think that's going to be pivotal, but obviously we are approaching those big levels, as we mentioned, so that might be all that's needed just to encourage that breakout or for the levels to hold. So yeah, certainly worth watching out for, but I don't think the data in itself is make or break. Hope that helps. All right, cheers everyone. See you Wednesday, if not, same time next week. Cheers.